That's an advert, bear in mind. This isn't. Hopefully it doesn't get copyrighted properly. But if it does and it's allowed on YouTube, then that's good. But anyway, we'll see. So, shipbreak over. So what we would want to have seen is a retrace to around this region, and then a nice 15M bar close, and then eventually an anatomic bar close, and then get on board. I just remember I used to have a strategy called TLST1 where it was like trendline breakouts and stuff. I probably would have took a win here actually in this short. Like I would never trade like this now, but because it was torture. It was absolutely torture. For example, I would have got short here. I would have got... No, I wouldn't have actually. Hang on. Yeah, I would have got short here, definitely. It might have been a win or a loss. Because I literally had a 0.5 risk to reward ratio. And I would risk 2% to make 1. So it's actually not that bad if you think about it. But anyway, yeah, it was torture. And I'm just going to turn this off actually. Because I thought myself... I thought to myself, well, it might be okay, but it's kind of irritating. There we go. That's better. No. Right. There we go. So, anyway, next day. So this is damn proof that, like, I mean, well, anyway, it could be fucking forged, to be fair. I could have just picked October, for example. Like, but just no, I've never done this before. I mean, like, if you implement what I'm doing, and even if you can implement what I'm doing, because I'm aware that it's entirely based on my experience, you'll soon find out that, yeah, okay, this actually works this way, this flow-based approach of dealing with how participants have traded, like, up to the given day's key time period. So we're up to the Tuesday now, which is the 1st of October. Hang on, what day were we just doing? Oh no, we're up to the 2nd. We're up to the Wednesday, sorry, yeah. So because this would be the data available relative to the daily in context for the Wednesday, which would be the given day's key time period. And anyway, we should probably start off with the 4-day, because that's still relatively new in its bar's emergence, if you would want it. Would that be valid to say? 2 seconds. Emergence. Relatively new in its, yeah, servicing, yeah, it basically is. Anyway, I thought so. Oh, bloody hell, why is... I need some, like, music that's, like, free. Let's just... Free techno trance. Techno trance. Music. Bloody hell.
I feel really warm when I am around you.
Hang on. Oh, Jesus. What's this? Fucking hell. You know what?
I'd like to tell you about the strangest secret in the world. Some years ago, the late Nobel Prize winning Dr. Albert
I'll be distracted. But want something that's like over 40 minutes and not a racket and Also, that doesn't have adverts. Honestly, that Genty guy is. Damn, I remember when I used to have a black and white, like a black, like Tom Algord style background. That's probably gonna come back, to be fair, based on my behavior, right? Like, I feel it inside us that, like, that's gonna, like, I'm gonna change it back. I'll only do so if, like, I'm not affected by it, though, like, seriously. Um, this'll do. Okay. No, I'll not stop. No, actually, yeah, I need to have my thing like this, but I'll not start this again. But you see, this is all raw and legit, like, it's not scripted. So, anyway, I'm emphasizing that a lot because I just know, like, the reality of the industry, or, like, mostly anyway. I mean, I don't see anyone who's legit, like, really, apart from Tom, and apart from that, obviously Andrew NFX, he is legit. There's a few, to be fair, but apart from them, I honestly couldn't name anyone. Paladin was, to be fair, so was Jade Cap, but like he just charges extortionate prices. To be fair, causes like, I mean, of course, if you're like a millionaire, like six. In fact, to be fair, nah, like six. Well, anyway, like just nah, it's extortionate, really. Considering at the end of the day, it all falls down to your own experience. But anyway, so we're on to the Wednesday now, and this, like, as I said, the 4-day bar as of the Wednesday is still relatively new in its emergence, right? Now, I would probably draw the box down to about just below the wick, just below the low for this. And obviously, this is just like, so hang on. So, like, we would be basically from and over the next 4-day bar close. Any prices that are better on the sell side than like than this price here. So any prices that are better than 2,618 and 236, 263. No, sorry. Any prices that are better than 619 and 635, so any up here, they would be considered as very good selling prices, right? But obviously that would be contingent upon how next step lower time frames are set up, because like if the one I was set up here for like straight bullishness at 640 to continue selling, then you know you wouldn't want to be selling that, because like you could easily just get wicked out. But what my point is are prime selling prices to see the next step lower time frame at hand pushes slash trends in play start to set up in the sort of a fashion that is like of the sort that suggests that like they're no longer willing to continue trading in the particular fashion what would sustain the life of that trend, whilst also considering that you would also consider, okay, well, where amongst the in-play and trend is the market situated at relative to the in-play bar? Like, where are participants trading at, like, right now? How has the push already traded, like, during or slash throughout the life cycle of that particular in-play and push relative to lower time frames? And how that compares to the previous at-hand push? And what the external at-hand push structure is, too. And yeah, then simply singling out what the in-play at-hand push is, and the intent to trade that's behind that in-play at-hand push, and how it contributes to the way it's structured with regard to the structure and the angle slash trajectory, which is just made up of the configuration of each of the bars, like the way they close, like one after the other. Anyway, so we would be expecting bullishness. We would be very confident in selling with within this price range. So basically anything within this 4-day time period, of course, because that's subject to change with how this 4-day time period closes. Like, because if this 4-day time period just closed like this, right? Of course, like it doesn't close like here, but you get the gist. If it just closed straight up, it's likely to just keep expanding upwards, right? Anyway, so within this 4-day time period, any prices above this down to here would be considered as very good selling prices. Any past, you would kind of want to be a bit like iffy because it's already kind of expanded what it's likely to do so, right? And it's kind of in territory where it's like a bit like recently with how traders have traded, like we haven't really seen how they've been willing to participate like with prices like here, you know. So you would kind of want to see how time frames below then start to set up, like for example, like the, I don't know, just all your time frames merge into one thing. So anyway, yeah, so it would be bearish on the on the 4-day, sorry, being specific. The Thursday, the 3-day wouldn't be ready yet. The 2-day, the same thing, and you would obviously note that like, I mean, bear in mind when I'm looking at the chart like this and not as of the info that would actually be available. In my head, I've been trained so much, but I still have to keep it up, otherwise I'd lose it. But because I've trained so much like this, I can have the push like this and still look at this and still analyze it in terms of how I would real time, right? So anyway, just for how I should do it anyway, right? It's basically like, I don't know, shaving a, like doing sawing a wood thing without goggles. But you're an expert at it basically. Regardless, still something could, like, well, if you keep doing it, you'll end up making a mistake. So it's just better to keep those goggles on. Same thing in this, really. You keep your goggles on with regard to real-time data, right? Anyway, if we were to get on board with this trend that's likely to prevail down to the downside, we would want to see the market set up in the appropriate fashion first. If we were to get on board with the 2-day time period, we obviously don't trade the 2-day time period, but we just do this as like an anticipatory measure, basically. So like, it's just like, okay, well, if we were to get on board with a 2-day, how would we want to see the market set up? Well, we'd want to see it retrace to around this region, the 618, or the 60% rather, sorry. I don't like to be as specific as 618. Anyway, I'm pretty sure I have 60. Yeah, I do, thank God. I would not want the 618. Not because I'm like, oh, don't want to be normal or whatever. It's just like, just why be so specific? Really, like, why does it matter? So anyway, I usually just use this fibs anyway to mark up the trend and basically discern the behavior, like comprising the trend, you know, and where we are within that behavior, and like within the life cycle of that trend, how participants have traded like and been trading like up to where we are now, and how they've most recently traded like and how that's likely to continue. And as of here, it's likely to continue lower, right? Anyway, would obviously back that up if like, so we would want to see the market retrace, but we would only be like looking for that, like, yeah, okay, the market's probably likely to set up in that fashion first before it heads lower. If, for example, like time frames below that suggested that, right? Now, anyway, that was the case actually for yesterday, if you remember and recall. Anyway, here you've got like a selling tail at the highs, like a liquidity wick reject, as Andrew calls it. I'm not mocking that. I genuinely call them that too. LQ liquidity wick. Yeah, LQRCC. That's how I type them really quick. Liquidity wick reject. Because they're also contextually relevant though too. Like for example, you would like if you see a liquidity wick reject right here, which we have. Like, under these circumstances of how traders have traded, like as of this point, it's significant, right? But obviously, this is like the 15-minute. This is more closer to the GU-EU approach, basically, and so like it's a bit more granular, like how we'd go into everything. Anyway, we see it a bit more clear around the 12 hour, and we see that like this is kind of good for cells, to be fair, under these circumstances. But obviously, would that subject to change relative to how the 8 hour and the possibly we might need to look at the 7 hour if 8 hours iffy, because if 8 hours bullish, then like that's not really that good, because it could just keep pushing higher before it arcs out, before intent and interest starts to transition over at the side of, like, for example, being off the sort that's like losing interest in trading to the upside. But like this just looks kind of bearish, to be fair, regardless, because if you were to get on side with this 12-hour bullishness, you would want to retrace anyway to, which I would probably say would probably come in about here, and then like on top of that, with how the daily and 2-day are poised, the 2-day and 4-day are poised to unfold, yeah, it's just likely to topple over, to be fair. But anyway, we're going to now see whether that's the case. So this is totally live, and I don't even trade gold, but like I was literally on it for a year straight, every single day, morning and afternoon. Like, it was my life, but for a solid year. So like I do have experience with it, but I just might be thinking, well, why, like, well, where's your results with it, or whatever, like, or maybe it's why aren't you trading it? Okay, well, this looks brilliant to topple over. This looks absolutely fantastic for shit sells. So yeah, this looks absolutely brilliant. So you don't even need to drop to the 4, you just drop to the sorry, you don't even need to drop to the 7, you just drop straight to the 4. Oh my god, this looks brilliant. See, this is like this is really good. This is really good. Like how I failed so miserably with the TLS-T1, which, like, well, this might say it all. I was just using the 15-minute time frame. That's it. I had a sole strategy for the 15-minute time frame on gold, right? Which actually it did have positive expectancy. It was statistically significant, and I don't even think. No, I wasn't trading it here. I was smashing EU here in October and GU, but like now I'm not really. I mean, I've took a win and not off this month, and last month was a bit of a fuck up, to be fair, because I missed a GU win because I was typing too much, which is okay, to be fair, because that's for my long run. That's for the long run. To be fair, actually, this is significant. This is actually brilliant. Look at this. This is right on. Wait. Oh, I'm not sure. 9 o'clock. Isn't that when German stocks open or something? No. No. German stocks open at 8. There's something that opens at 9. But anyway, look at this. So we dropped to the 4, right? Wait, actually, I didn't even look at the 4 hour. How was the 4 hour set up? I knew it was bearish, but... Oh, no, yeah, that's poised to keep pushing low. Okay, nice. So, yeah, you could drop... So, obviously, I didn't look at it how it would look at real time. I just, like, looked at it as if it was real time. Same thing in my head now, honestly. Anyway, would then mark up... I'll do this part legit. Even though that other part that I just done was also legit. But anyway, so as of here, right, you might be thinking, well, why wouldn't you long in this case after I'm about to say? But I'll explain. So this is the bar as of 7 in the morning, what you would see. Now, you would want to see the 15-minute chart perspective set up appropriately, as to however it must do so based on the situation, what's at hand as of the given key time period. Now, you would want to see, you would definitely, okay, so you would want to see a retrace to this region, right? Now, you might be thinking, well, why wouldn't you long that? Well, because every other higher time frame is from these prices what are available as of 7. I mean, the 8 closed at 7, the 4 closed at 7, and in all the other time frames, though, like, they're still open and, like, ongoing and subject to change with time, but primarily with time as it changes, they're primarily poised to be biased on the sell side. right? And then the 8 and 4 have just closed at 7, and those prices, what the market's opened at as of 7, are poised to primarily be interacted with on the sell side, right? So, like, that over the next time periods, and that could easily take hold from now. So, we would much rather just want to wait for the market to set up appropriately, and then, see the nice bar close here and then short, right? But obviously under the right circumstances. Anyway, because like I've just realised too, I actually probably would have took a win with TLS2. I'm just, bear in mind, like, this is just me playing around too. So obviously I'm very passionate about this. But like obviously, like, because I don't know if I can drop down here, but like you would have like the point 1, #1, #2, #3, close, confirm, and then you would drop down. No, 1, 2, 3, 4, and then you would drop down as of 6:45, and you would refine this. I'm just gonna actually see. You just like, this is just playing around, by the way. Like I'm not going back to this, but like I don't even think I'll be able to get back. It seems I'm not interested to just play around with it a little bit, because it was actually positive. It did have a positive expectancy. Yeah, so then what you would do is you'd refine it to this, like that, and then you'd wait for a 5M bar close above, and then you would short based on the situation at hand too. So you would probably have your stop about here, and then you'd target a 0.5 bar, and you would actually take a win there, right? So like, I do honestly think it's like I said, it is tradable, but like, it was just like soul destroying in the times where it didn't work. And I guess some people say, well, that's the price you pay with trading. Well, yeah, but there is also other approaches, right? And it was just too full on, to be fair. It really was. It was just too full on. I could not trade like this consistently. And this looks pretty and all, with like you know, that trade setup just there. It looks cool. But honestly, if you've seen the bad days, you'd be like, yeah, okay, no. But like, even still, on those bad days, it could, like, they were only bad in advance. No, after the fact, sorry, not in advance. That's the opposite of what I meant. But anyway, relative to this, yeah, see the 50-minute hand set up appropriately, get the nice bar closed. You'd look to short here. This is confirmation, but like, see, it's just valid though. Like, based on the bearishness, based on the situation at hand, like the iffiness at hand of how this bar closed, like, it would actually be valid. But there's no way you're getting a 0. There's no way you're getting a more than a 0.9 R to here. So what you would do is you would simply do this. You'll see. Okay, so you'd see the situation at hand. Now the market could easily. So I'm looking at this region, like so. I see this distinct area of involvement, and then I would probably immediately resort to looking at this. Well, technically, if we just do the blue line ourselves, and then scroll the most recent price action to the left. Would you want to stop there? No. No, it could easily wick higher. No. Could easily wick higher. To be fair, just kind of want it there, to be fair. Right there. Based on the situation at hand too. Yeah. And then what you do is wait till you can get a 1-to-1 to here. Yeah, so you're all a little bit more lenient too when you're doing this. Yeah, so there we go. That's pretty sweet. Did it go in? Oh, we'll see. So that would have been awful. But anyway, it actually worked. So that's pretty nice to see. But like, yeah. Hang on. I'm just curious on what the 10-minute was like. Ah, well, that's interesting. Hmm. Phew, this is a good situation, and to be fair, I actually kind of forgot how I used to do it. To be fair, like totally. I'm pretty sure what I would do is I'd just do this and then look to the left, mark this, and then go to the left, and then like see if, for example, you entered here, where would you have your stop? If, for example, you were forced to have entered here, just hypothetical. Well, in that case, if you had entered here, you'd probably want your stop at about there, which, there we go, yeah, that is probably actually what we were doing, because that's where my subconscious mind had my stop. So, yeah, that is probably what you do. So you have your initial stop, and then you scroll to the left to the most recent price action, what is available. This is obviously a very sus point. So then what you would do is you do this, and you go to the left. Now, if you entered here with this price action that was available, all this from this bar was not there, and you entered here, where would you want your stop? Well, you would want it about halfway, about there minimum. So, yeah. And then that would be a win. So there we go. And then obviously your market playable range too. So on the lead up to this, and then you get your nice bar close, you'd discern your playable range, and this closed like this confirmed with enough playable range before closing in the entirety. So if it closed like here, you would probably just want to wait for a new playable range, so like this, and then you would get in here, and then same thing, same SL placement probably, to be fair. Yeah, probably about here. Yeah, so wait, yeah, honestly, I didn't even see where my stop loss is there, so there we go. Just shows. So yeah, and anyway, we get a nice win, and so we'd be entering at about 9:30. Take some heat, to be fair, and but it doesn't really matter. It's all strategy based. It's not whim. It's not like, oh, sell, sell there. Nah. So yeah, that's that.